Today we're breaking down GLTR, the abrdn Physical Precious Metals Basket Shares ETF, a unique ETF designed to provide direct exposure to physical precious metals rather than mining companies or futures contracts. GLTR tracks the spot prices of a basket of gold, silver, platinum, and palladium, net of trust expenses, making it one of the most diversified physical precious metals ETFs available. GLTR was the first ETF to offer a broad basket of physical precious metals. While most precious metals products focus solely on gold or a gold and silver combination, GLTR expands that exposure to include platinum and palladium, metals that play a significant role in industrial and automotive applications as well as investment demand. Unlike futures-based commodity ETFs, GLTR holds physical bullion. The fund's gold and silver are custodied by J.P. Morgan Chase Bank and stored in London, while platinum and palladium bullion are held in London or Zurich. Because the ETF holds actual metal, its performance tends to closely track spot prices, minus expenses, rather than being affected by futures roll costs or contango. The fund's net asset value is calculated using the London metal price for each metal in the basket. This pricing mechanism helps ensure that GLTR maintains a tight relationship with real-world spot prices, making it a relatively straightforward way to access precious metals through a brokerage account. Structurally, GLTR is organized as a grantor trust, which is an important detail for investors. This structure prevents the trustees from lending out the underlying metals, meaning the bullion is fully allocated and held for the benefit of shareholders. In other words, GLTR's exposure is backed by physical metal rather than financial claims or derivatives. The basket approach offers diversification within precious metals. Gold often acts as a store of value and hedge against monetary instability. Silver has both monetary and industrial uses. Platinum and palladium are heavily tied to industrial demand, particularly in catalytic converters and other manufacturing processes. Holding all four metals together can help smooth performance across different economic environments. From a portfolio construction standpoint, GLTR is often used as a diversifier or inflation hedge. Precious metals can behave differently from stocks and bonds, particularly during periods of currency debasement, geopolitical stress, or rising inflation. However, they can also experience long periods of underperformance, especially when real interest rates are rising. It's also worth noting the fund's history. On April 27, 2018, Aberdeen acquired GLTR from ETF Securities, and the fund has continued to operate under the abrdn brand. Despite the change in ownership, the core structure and objective of the ETF have remained consistent. Like all precious metals ETFs, GLTR comes with certain considerations. It does not generate income, and returns are driven entirely by metal price movements. Investors should also be aware of potential tax implications, as physical metals ETFs are often treated differently than traditional equity or bond funds for tax purposes. The bottom line is this: GLTR offers diversified, physically backed exposure to four major precious metals in a single ETF. For investors looking to go beyond gold and silver and gain broader exposure to the precious metals complex without futures risk, GLTR is a compelling option. If you found this breakdown helpful, make sure to like the video, subscribe to the ETF Investor, and comment below. Do you prefer holding gold alone, or do you like diversified precious metals exposure through a fund like GLTR?